Hey guys, welcome back to Stacking Stocks, and thank you for joining us today. We're back with some hot content on NIO third quarter earnings. What are the numbers? Are they good enough to lure investors into buying? We know that a good financial position is a motivating factor when it comes to buying stocks. Nobody wants to spend their money on a sinking ship. Today we'll look at how NIO has been performing. So let's hit the ground running. NIO Incorporated reported mixed financial results for third quarter financial year 2021. The company posted a loss per share of 28 cents. That's more than twice as large as the loss per share analysts expected. Revenue, however, beat expectations, rising 116.6% year over year. NIO's vehicle deliveries, which were reported at the beginning of October, exceeded analyst forecasts. The company's shares fell more than 2% in post-market trading. Over the past year, NIO shares have provided a total return of negative 7.7%. That's well below the S&P 500's total return of 32%. How about NIO vehicle deliveries? Most of NIO's revenue is generated through the sale of vehicles. NIO delivered a total of 24,439 vehicles in the third quarter financial year 2021. That's up 102.2% from the year-ago quarter. Total vehicle deliveries can be broken down into deliveries of three models. 5,418 ES8s, that's the company's 6-seater and 7-seater flagship premium smart electric SUV. 11,271 ES6s, that's the company's 5-seater high-performance premium smart electric SUV. And 7,750 EC6s, the company's 5-seater premium electric coupe SUV 24. The number of vehicle deliveries provides an indication of the demand for NIO's vehicles as well as the company's ability to scale production. NIO has faced a number of supply chain issues this year, including challenges related to the global semiconductor shortage. The company noted in its third quarter earnings press release that vehicle deliveries for the month of October fell 27.5% year over year. NIO cited upgrades to manufacturing lines, preparations for new products, and volatility in supply chains as reasons for the significant decline in deliveries compared to the same period a year ago. Despite the continued supply chain volatilities, NIO's teams and partners have been working closely together to secure the supply and production for the fourth quarter of 2021. We've established that total vehicle sales were up 102.4% compared to the year-ago quarter. Vehicle sales accounted for about 88% of NIO's total revenue for the quarter. The company's vehicle margin, a measure of gross margin for vehicle sales, was 18% compared to 14.5% in the year-ago quarter. When vehicle margin is higher, it means that more vehicle sales are being generated relative to the cost of making those vehicles. NIO said that the year-over-year rise in its vehicle margin was primarily driven by higher average selling prices and lower material costs. Now let's look at NIO vehicle deliveries and revenue outlook. In contrast to the sluggish performance in September, NIO stock has been on a steady rally in October towards a new monthly high of more than $42 after posting better than expected delivery volumes for the third quarter. Recall that the global tightening of automotive chip supply had the Chinese electric vehicle maker dial down its initial third quarter delivery guidance after experiencing disappointing mid-quarter production and delivery volumes in August, and that's despite robust order volumes. Yet record-setting September delivery volumes of more than 10,600 vehicles were more than enough to offset the mid-quarter woes, bringing NIO's third quarter deliveries to 24,439 vehicles, up 100.2% from the prior year. The announcement made in early October led the stock on a steady month-long rally that topped $44 the night before its third quarter earnings release. Not even poor delivery volumes in October, which fell below 4,000 vehicles due to scheduled maintenance at its manufacturing facility, were able to counter the stock's most recent uptrend. However, despite sales and earnings that topped consensus estimates, weaker than expected guidance for the fourth quarter recently announced had shaken investors' confidence from the month earlier. The stock had subsequently pulled back to the sub-$40 level as investors mull on the possibility of flat sales in which has historically been the strongest sales quarter of the year. But the stock has since rebounded to above $42 as we approach the end of the year, showing resilience buoyed by investors' recent affirmation of their optimism for NIO's growth outlook. Despite guiding flat sales from the third quarter to the fourth quarter, there have not been any material changes to NIO's near-term growth roadmap. Management remains on track with regard to the delivery of several key catalysts ahead, including its near-term overseas expansion plans and product roadmap, which will likely keep the stock from further declines. NIO has also announced the development of a new, lower-cost hybrid 75 kilowatt-hour battery, which will be put to use starting later this month and enable better vehicle margins going forward. Despite near-term impacts from protracted supply chain woes, the stock remains well-positioned for promising returns ahead given NIO's roadmap to increasing market share through its ongoing foray in Europe, extensive model pipeline, and ability to improve margins through continuous innovation and scale. On these considerations, we remain bullish on NIO. Better than expected deliveries during the third quarter have proven NIO's ability to navigate prudently through significant operational pressure, while many legacy automakers continue to reel from prolonged impacts of supply chain constraints. And that's considering the latest word from chip makers indicate that supply will not restore its balance until at least mid-2022. The market predicts close to 8 million fewer vehicles sold this year, or more than $210 billion of lost revenues. Despite NIO's weaker-than-expected fourth-quarter delivery guidance, a deeper look would reveal its continued strengths in navigating through ongoing supply chain woes. NIO expects to deliver 23,500 to 25,500 vehicles in the fourth quarter, which is basically flat from the record-setting 24,439 vehicles delivered in the third quarter. This would represent a year-on-year increase of approximately 35.4% to 46.9%. It expects revenues to rise between 41.2% and 52.2% compared to the fourth quarter of the full year 2020. NIO's next earnings report for the fourth quarter financial year 2021 is estimated to be released on February 28, 2022. Now, we're looking forward to the report to see if the EV company has been making some progress. Upon first glance, it looks like bad news considering the fourth quarter is usually the strongest sales quarter of the year, but it would still bring 2021 total deliveries to 89,895 vehicles to 91,895 vehicles, which represents a growth of 106 to 110% from the prior year. But a closer examination of the guided delivery range would indicate that NIO's ability in managing ongoing supply chain constraints in the current quarter would be even stronger than in the third quarter. Note that production volumes in the fourth quarter were off to a weak start. Only 3,667 vehicles were delivered in October, primarily due to scheduled upgrades and restructuring of manufacturing lines at its JAC NIO production facility in Hefei between September 28th and October 15th. The scheduled maintenance was inevitable, as they were required in preparation for upcoming new vehicle program introductions, including the ET7 slated for the start of productions and customer deliveries in the first quarter in 2022. Subtracting the 3,667 vehicles produced in October from the guided range, NIO is expected to deliver more than 9,900 to 10,900 vehicles per month on average through to the end of the year. These figures would have beat delivery volumes in preceding quarters if normalized for 3 months and exceeded the September delivery record of 10,628 vehicles. Non-recurring production challenges aside, NIO continues to demonstrate its strengths in navigating effectively through operational pressure emanating from ongoing supply chain snarls. Much of NIO's top-line growth will be led by vehicle sales. The company is forecasted to generate vehicle revenues of $5.1 billion from the sale of close to 91,000 vehicles by the end of the year, with a further growth at a CAGR of 30.2% towards $71.7 billion generated from the sale of more than 1.1 million vehicles by the end of the decade. Other revenues, which are primarily generated from various subscription sales such as BaaS or ADAS, and regulatory credit sales are projected to total $544.4 million by the end of the year and further advance a CAGR of 28% towards $40.9 billion from $6.4 billion, which is consistent with anticipated incremental vehicle sales over the forecasted period. The projected cost structure for NIO remains largely unchanged. Consolidated gross profit margins are expected to grow towards 25% by 2025, supported by continued production ramp-up towards scale as well as incremental cost savings enabled by ongoing technological advancements. The margin expansion trajectory is also consistent with management's intentions to achieve a gross profit margin of 25% when production volumes hit 300,000 vehicles. As always, we'll keep monitoring the progress of the stock as the company ramps up production. Well, that's it for today. If you enjoyed the video, don't forget to like, share, and subscribe. See you next time right here on Stacking Stocks.